want to emphasize sort of one theme from the legislative session is that it could have been a lot worse. The legislators were looking at the excise tax on sugar-sweetened beverages. They were looking at candy tax. They were looking at a whole bunch of different revenue-raising ideas that would be extremely confusing and difficult to administer. So the soft drink tax, while may be inconvenient for folks, it is sort of the lesser of a whole bunch of the lesser evil of a whole bunch of other options out there. So today we're going to focus mainly on the sales tax on soft drinks, but we'll also touch on the cigarette and tobacco tax increase, the floor stock tax, wage garnishment, which is a new collection measure that the tax department has, and a couple technical changes. And once we do that, we will, at the end of the session, have some time for folks to type in questions. If you look at the side of your screen, you can ask questions by typing them in. We found that this is a bit easier than having people unmuted and all talking at once. So if you want to type in questions at any point, feel free to do so, and then we'll go down the line and try to get to as many questions as possible at the end of the presentation. And so with that, I will hand it over to Jeff.
Hello, my name is Jeff Dooley. I'm the lead tax policy analyst with the Vermont Department of Taxes. And today I'm going to talk a little bit about the new sales tax on soft drinks. As I'm sure all of you know, up until this year, there was no sales tax due on any food, including soft drinks. This last legislative session, the legislature passed a law imposing sales tax on soft drinks. The same rate applies as it does any other taxable item, so it's 6% in general and 7% if you're in a local option town. Just like any other product, it's destination-based tax. So if you're not in a local option town and someone comes into your store and you sell it to them and hand the soft drink over to them there, then the 6% sales tax rate applies. If for some reason you're delivering it to a local option town, then you would apply the 7% sales tax rate. So what are soft drinks? Soft drinks are non-alcoholic beverages that contain natural or artificial sweeteners. And then it explicitly says what aren't soft drinks. Soft drinks are not beverages that contain milk or milk products, soy, rice, or similar milk substitutes. And they're also not beverages that contain greater than 50% of vegetable or fruit juice by volume. And while we're on the slide, one other thing that came up since the last webinar was are products that qualify as a dietary supplement taxable if they're in beverage form and contain a sweetener. And dietary supplements are specifically exempted from sales tax, so any dietary supplement, even if liquid form and even if it contains an artificial or natural sweetener, would still be exempt. So if it has the supplement label on it, it would still be exempt as a dietary supplement. Okay, let's look at some specific examples. Bottled water. Bottled water is exempt if it doesn't contain any natural or artificial sweeteners. So any water that is any flavored water that contains sweeteners would be taxed, but just your plain bottled water that doesn't contain any sweeteners would remain exempt. Alcoholic and non-alcoholic beverages. Alcoholic beverages have been taxable for a while, so nothing has changed there. Now the big change is that non-alcoholic beer would now be subject to sales tax because it contains sweeteners. Beverage powders and concentrates. Beverage powders and concentrates are not considered soft drinks and are exempt from tax. And there's one clarification I want to make here because we got the question also since the last seminar about MIO. And there was some internal debate in the department and different states handle MIO differently. At the last minute, we decided decided that we were going to take the less aggressive approach and treat MEO as a concentrate and say that MEO is not taxable. This is a change from a version of the fact sheet that went out on Thursday night. It's since been changed. The official fact sheet that's on our website and that we'll be distributing does not say that MEO is taxable, but if you got an earlier version, that may be incorrectly stated as taxable. But for the record, MEO is not taxable.
And just for everyone out there, I'm sure you all know this, but MEO is that concentrate that you can buy and then you put it into water to flavor it, and you sort of have it on the go.
Yeah. Any liquid, any concentrate, whether it's liquid, frozen, or powder. So yeah, MEO or other liquid concentrates are not taxable. Okay, so let's. This is just a list of some specific examples of ingredients that if a beverage contains it, then it would be taxable. I won't go through the entire list. You can see it there. This presentation will be available and also on our fact sheet. It'll contain all this information, but as you can see on the right, there's some examples. We already talked about bottled water, coffee and tea drinks with sweeteners. So the Starbucks Frappuccino that comes prepackaged, that would be taxable. Energy drinks such as Red Bull, sports drinks, soda, any fruit beverage that contains less than 50% fruit juice. And here are some things that are not taxable, and we already talked about most of these as well. Milk or milk products. I immediately stand corrected. Frappuccino has milk, so it's not. But some coffee drinks that do have sweetener that don't contain milk would be taxable. So I apologize for that. Frappuccino contains milk. And then there are other states that have similar taxes on soft drinks where you can look. If you have any colleagues there, they might be able to give you some assistance. But here are just a non-exhaustive list, but there's roughly, at least 15 states that also tax soft drinks in the same way that Vermont is now going to be taxing soft drinks. And now I will turn it back over to Devin to talk about the SNAP program.
Hi. So yeah, just going back to those states real quick, you'll notice that Rhode Island, which is probably the closest one to Vermont, has a similar law, and so maybe worth talking to any folks there that you know about, or if you have stores there, then you can sort of adopt those guidelines relatively easily. But those are some other resources we can look to for guidance on what to do about the soft drink sales tax. So purchasing soft drinks with SNAP, otherwise known as the Food Stamps Program or 3 Squares Vermont, and I do understand that we have some folks here from the Agency of Human Services who can help us out with some food stamp issues. I will try to unmute you at the end if we're getting food stamp questions that we need help on, or otherwise you can write in any of your comments or corrections that you might have for us, and we'll share that with the rest of the audience. But the purchase of, so SNAP, the Food Stamps Program, is a federal program, and we cannot tax the federal government. So as a result, we cannot apply the sales tax to items that are bought with food stamps through the SNAP program. So federal law prohibits charging sales tax on this food, and so if a customer purchases taxable and non-taxable food stamps eligible items and pays with a combination of food stamps and cash, the vendor should apply the food stamps to the eligible taxable items first, and then the remaining food stamps to the eligible non-taxable purchases. So that's just a general sort of guideline, is previously all of your food stamp eligible food and beverages have been exempt. Now there are beverages that are subject to the sales tax that are thrown into the mix, and so, but you cannot tax them with food stamps, and so you will basically have to just have them in line first, get them sort of put them through the register first, and then apply the food stamps accordingly. So we can do an example, and if you were on the call last week, you'll remember my example was very involved and complicated. You're always welcome to reference that example once you have mastered the sort of concepts here. We can make that example available to you, but just as a simple example of purchasing soft drinks through the 3 Squares Vermont /food stamps program, if a customer makes a purchase that's fresh fruit and vegetables, those are eligible under the SNAP program. They are not subject to sales tax, and they might be bought for $10. Someone buys a bunch of diet soda that is also eligible through the SNAP program that is subject to sales tax, and they buy that for $10. And then something like a whole bunch of batteries that is not eligible for SNAP because it's not a food product, it is subject to sales tax, and the price for that is $10. So a customer makes these purchases, and the thing to do is if you have software, a lot of the software systems can handle this sort of situation. If you don't have software, a good thing to do is to ring up the drinks first. So whether the drinks are taxed or not, just think, ring up drinks first, and this way you will have sort of complied with the whole idea that you can't tax food stamp purchases. So in this scenario, you ring up the diet soda first because it is eligible for SNAP and for sales tax, and so you ring that up, and then ring up the fresh fruits and vegetables, and then the batteries. And then you can go ahead and apply the food stamps. So here the customer pays with $8 in 3 Squares Vermont food stamps and $22 in cash. So that $8 will go towards that diet soda. Once you subtract out the 3 Squares Vermont /food stamps /EBT, you will get the taxable amount as $2. And then when you add in the fresh fruits and vegetables, those are not taxable. And the batteries, which are taxable, you end up with taxable items of that $2, that's the amount after applying the food stamps, and the $10, which are the batteries. And so your total taxable amount is $12. This gives you sort of a detailed methodology of going through applying the food stamps and not taxing them. It throws in how to use store coupons versus manufacturer, or it throws in how to use store coupons with that. There is very good detailed information on New York's website on how to do this. But basically, if you prioritize the soft drinks and if you ring those through first, then that will comply with this whole idea that you cannot tax items that are eligible for food stamps. So that's the soft drink information. The next piece of information to keep in mind is that effective July 1, 2015, the rate of tax on cigarettes and tobacco products will increase by 33 cents. And our updated forms will be posted on our website in August after the July filing due date. along with the tobacco tax is a floor stock tax, and that is on every retail dealer on tobacco in possession as of 12:01 a.m. on July 1st, 2015. And the floor stock tax form and tax is due on or before August 25th, 2015. This form has been mailed to all retailers and distributors, and we actually have very high compliance on this. So a lot of you have dealt with this before, and so we are not anticipating a whole lot of trouble coming from this, but we did want you to know that this is a change taking place. Another change taking place is that the legislature has given the Vermont Tax Department a different way to sort of collect on unpaid taxes after people go through due process. So right now, the department garnishes wages through the court system. With the new law, the department can garnish wages directly with the employer by sending a notice of garnishment, and that's after the Department of Taxes has gone through hearings and gone through a court process and hasn't received responses from anyone or gets a sort of final determination that the debt is owed. So once that happens, the tax department can send a notice of garnishment to the employer, and that would proceed just as it would with with garnishment that happens through a court. And so what employers see will be very similar to current practice, except for the fact that the exemption of wages, which is normally 75% of wages or 35 times the federal hourly minimum wage per week, for taxes are protected here. A little bit more is protected with 80% of wages or 40 times the federal hourly minimum wage per week, whichever is greater. So there's a little bit more protection for wages under this new garnishment and attachment system, and we will be sure to make that clear on our notices. There's also a little bit of technical changes. One is having W-2 or having healthcare, the healthcare that's offered by the employer, having the employer who's offering healthcare put the cost of the employer-sponsored healthcare on W-2 forms, and that's in box 12 with, I believe, the code is ED. So just taking, this is already a requirement for the Affordable Care Act, and a lot of payroll systems are doing this currently, but if you are an employer who offers healthcare coverage to your employees, just having that amount on the W-2 form to sort of increase awareness with the employer and with the employee. For the employer, we're thinking it'll be especially helpful for thinking about the Cadillac tax, which is coming around the corner in 2018, and so employers can prepare for that instead of being hit too hard just by fully realizing how much their health care costs, and also sort of informing employees who oftentimes don't understand how much they're exactly getting from employers in their health care. There's also a new requirement that employers who are employers currently withhold on a semi-weekly basis if they meet this threshold of $9,000. We've scrapped that because it was confusing, and so we are just requiring that employers who currently pay federal or who currently withhold their federal information on a semi-weekly basis, they will now do the state withholding on a semi-weekly basis as well. So just syncing that up to make it a little bit easier for folks here. And that will start on July 1st, 2015. And here are some resources. We have the corrected sales tax and on soft drinks fact sheet up on our website, and so that does not have the the MIO, the concentrated thing that we had discussed before. So that is all updated and corrected, and that's the one you should follow. There's also very good information on SNAP/food stamps/EBT/3 Squares Vermont at the USDA website. You can also go to the Agency of Human Services for more information on that. And there's a presentation that I did for the legislative session on information on healthcare and W-2 forms in case there's some confusion about what to do about the W-2 form. And with that, we will open it up to questions and take a look at those.
Devin, could you just refresh how you ask questions online?
Yes. So you go to your, I guess it's called the dashboard, the sort of that thing that you have in the right-hand corner of your screen, and there's a part that says questions, and you just go in there and you can type in your questions and send it. So do feel free to do that. And the first question that we have is, would 5-hour energy drinks be taxable? That's a great question for Jeff.
And the answer is yes, they would be taxable, because unlike the liquid concentrates, those are for consumption straight. They're not meant to be diluted, so they are considered a soft drink, and they do contain a sweetener. They do contain a sweetener, so they are considered a soft drink, and so 5-hour energy is taxable.
The next question is, why does the SNAP purchase example show that a soda tax is applied to the sale when it is first mentioned that it is illegal to tax the federal government? It seems contradictory. Yes, and the SNAP stuff is confusing. So what I want to make clear is that if someone has food stamps that covers all of their items, their food stamp eligible items, then there's no tax applied in that case. I wanted to do a case where there's food stamps, but it doesn't cover all of the items, in which case you would give the soft drinks priority, ring them through first, and then you would tax anything that's left over. So in the example, we had soft drinks, the soda, the diet soda for $10. There was only $8 in food stamps, so the $2 left over would be taxed.
Okay, and if a drink contains milk, it is exempt. I misspoke earlier when I briefly said a Frappuccino would be taxable. It is not. Anything that contains milk or a milk substitute is exempt. But if a coffee drink, say, contains sugar but no milk, then it would be taxable. And kombucha, I'm glad you asked. We actually looked into this a lot since the last webinar. And much like seltzer and some other beverages, there are different types of kombucha. From what I understand and what my research showed is basic kombucha, on the ingredient list, it doesn't contain a sweetener. And so that would not be a soft drink. There are also some flavored kombuchas, mango and various other flavors that do contain artificial or natural sweeteners. And those products would be taxable because they contain a sweetener. So unfortunately, with things like kombucha, seltzer, soda water, things like that, it's kind of a case-by-case basis. It's the basic kind that doesn't contain a sweetener. It's much like bottled water. The basic kind that doesn't contain a sweetener, it's not a soft drink, it's not taxable, but if it's flavored in some way that uses a sweetener, then it is taxable.
The next question is, we are a vending company, so we would not charge the 6%, but we have to pay the meals and rooms 9% on all items sold via the machine. However, will we be charged the 6% sales tax on soft drinks from our suppliers, or is this retail only and won't be passed down through wholesale?
There is an exemption for sales tax for items that are taxed under our meals tax. So this would essentially be, and also this would essentially be a sale for resale. So you should supply your supplier with a resale exemption certificate, and those items should not be taxed to you when you buy them, but you are correct that you should charge the 9% meals tax on those products, or remit the 9% at least.
So 9% is remitted, and then the 6% sales tax does not apply.
Right. You shouldn't pay the 6%, and you shouldn't charge the 6%. The only tax should be the 9% meals tax on the final transaction.
Jeff, can I go back to the energy drink example that you gave?
Sure.
I have a bottle of not energy drink, but called energy water here. And water as a rule is not a beverage, but in looking at the ingredients on this, it contains sucrose. So I would assume that has a sweetener and is in fact now considered a soft drink under the definition, correct?
That's correct.
Okay, and then the second example I have is a bottle of iced tea, and most iced teas, diet or regular, have a sweetener in it and would be taxable, but there are some iced teas that are unsweetened, and they say specifically that on the label. So I would assume, again, that that would not be a soft drink under the definition and not taxable. Is that correct?
That is correct.
Okay, thank you.
Yes, if it's unsweetened in any way, it doesn't matter what type of product it is. If there's no sweetener added, then it's not a soft drink. And the reverse is true. If it's normally something like water or tea, and it is sweetened, then it's a soft drink.
Okay, one of the questions that have come up on the past on the sales tax on SNAP purchases that is not collected from the customer. What is the sales tax collected at all from that customer, or does it just not collected and not paid by the store or anyone?
That is a good question, Jim. And we will get you more information on that. Let me look into that a little bit more and get back to you.
Okay. I mean, I guess one of the things, and as you folks do audits, one of the things, if it's a store that has a high percentage of SNAP purchases, that the sales tax revenue per total sales may be less than, say, a comparable store that doesn't have a lot of SNAP purchases. And I would assume there's a way in your audit process to verify that.
Right. Yes, we will look into that and get back to you a little bit more on that issue.
Yeah, and much in the way that we're attempting to educate the public and the retailers, there will be a process of educating our staff, including the audit staff, on how they should apply this new tax and what they should look for and what documentation they should accept and those types of issues. There will be some internal education to make sure that we're applying the law consistently and correctly, both on the front end and on the audit side of things.
So another question that we received was, thank you for addressing the supplement question under 32 VSA 970127. Is the supplement label alone on a beverage enough to pull it out of the soft drink category and into the supplement category? I know 5-Hour Energy is still listed as taxable in the revised publication, but the product contains a supplement label. Is this correct? Also, energy drinks with nutrition labels are obviously taxable, but what about products like Neuro drinks? supplement enhanced drinks for clarity, sleep, energy, etc., containing supplement labels.
Okay, well, dietary supplement actually has a specific definition in our statute. It needs to contain certain ingredients. It needs to contain one or more of the following, excuse me for reading, but a vitamin, a mineral, an herb, an amino acid, or a dietary substance for use by humans to supplement the diet by increasing total dietary intake. And then it also is required to have the supplement label, and it's intended to be ingested. One of them is in liquid form, so for the purposes of this, I'm guessing they're all going to be in liquid form. So it needs to contain one of those items and a supplement label, and if it meets those requirements, then it would be a supplement that is not subject to tax.
Okay. Another question is to clarify, larger sizes of Ocean Spray juices, Newman's lemonade, based on their criteria, would be subject to this tax, correct?
It would depend on whether or not they contain, well, for the juices, it would depend on whether they contain more than 50% fruit juice. And I guess that would apply to all of them. If they contain less than 50% fruit juice and have a sweetener, then they would be taxable. If they have more than 50% fruit juice, then they would not be taxable.
Okay. Another question is, some SNAP households have their 3 Square Vermont benefits directly deposited to their checking account. How do retailers avoid taxing these people? Similarly, what about households paying with EBT cash instead of EBT food? Could be 3 Square Vermont benefits, could be another benefit like Reach Up or GA. So I'm going to defer to our Agency of Human Services folks, and I actually sent a PIN invite to, I think, one of the people on here who's with the Agency of Human Services to try to get an answer on this. But I think the answer to that is that what applies are this is applicable to the 3 Squares Vermont. It's not applicable necessarily to money that's coming out of a checking account. But like I said, if any of the Agency of Human Services folks want to jump in just to clarify that, that would be good. And again, I think going to that website that I have in this presentation is also helpful in that area. Someone pointed out that soda vending machines that are filled by a vendor, such as a Coke vendor, are the vendors responsible for setting the machines to charge the tax. So that's good to know. Another person talked about how with people who are getting 3 Squares Vermont, that those are not soft drinks and energy drinks and soda are not food. But this is not a, that's sort of getting into the 3 Squares Vermont program, but I should clarify that this is not like the sugar sweetened beverage tax, which was trying to change healthcare or trying to incentivize people to make healthy decisions. This was it ended up being more of a revenue raising measure with hopefully the added benefit that people would make healthier decisions. But this is a sales tax. This is not the sort of same concept as the sugar sweetened beverage tax.
Devin, can
So
I?
another question is, with the rules concerning calling attention to a SNAP customer, how do our cashiers handle the order in which the items are rang up? I assume we cannot say, hey, how are you paying for this? Oh, you're a SNAP customer, please put X items first. My advice to that is, I agree, it's not a good idea to ask people if they're SNAP customers. I know the Agency of Human Services discourages this highly. There's by no means do we want to stigmatize people who are on the 3 Squares per Month program. I would suggest, like I said before, a lot of the stores that have computer programs should be able to handle this fairly easily. There are other states that do this, and they have computer programs that take this into account. If you're a small store and don't have a computer, like I said before, I would suggest just having a policy of having drink items first. That's kind of easier when you're bagging sometimes too, but that would sort of take away any awkwardness or any stigma around asking people how they're paying for things, and it would ensure that you are complying with this idea that you can't tax federal benefits.
Devin, if I just may offer clarification on that, you're absolutely right. Federal law, there are certain discrimination issues that you can't do. For example, you can't have a separate SNAP-only checkout line if you have multiple checkout lines. For example, that's expressly forbidden. However, in a response to a similar question to USDA last night, the retail policy manager, director of the retail policy division, did write back. And if you are not a computerized register in the retail, it does have to separate. You are allowed to post some signage at your checkout that asks clients to let the checker know if you're using SNAP benefits. And we will certainly work with the agencies in Vermont to come up with some appropriate wording, perhaps, that could be distributed. But the checker would need to know to separate the items or ring beverages first, as Devin suggested, so that you didn't charge the tax. Otherwise, you end up with a situation where you've got to void out the tax, and that could be a little bit of a problem at the checkout.
Yes, thank you, Jim. That's really helpful. The next question is, was the proposed tax on candy dropped? And the answer is yes, it was dropped. There is no candy tax. The only major sales tax change is the soft drink tax. So there were all sorts of sales tax ideas put on the floor between bottled water, candy, a whole bunch of things. So soft drink is the only sales tax change to be aware of.
And I, for one, am very happy that the proposed candy tax was not adopted. I think the streamlined definition of candy is a mess.
Oh, so I got it wrong before. I thought Lori was giving us. Like a Coke vendor, does Coke set the price to include the sales tax or not?
My understanding, one of the tax changes is that vending machines now have a blanket application of the meals tax. So whether a store or a retailer is filling a vending machine, or whether the soda company themselves are filling the soda machine, whoever is collecting the receipts on that is going to have to pay the meals tax on those receipts. Is that not correct?
That's correct, and actually I should clarify, it's the operator of the machine. So the operator of the machine doesn't have to get a license for each machine, but they do have to collect and remit the tax. So whoever's the owner, operator of the machines, they would do that.
Yes, that's correct. I think that whoever is ultimately responsible for paying the tax should make sure that it's programmed correctly to charge the tax. The vendors may do that as a service, but ultimately the person, as Jim said, who's getting the revenue from the machine is the person who's responsible, so they should make sure that the machine is charging the correct amount.
The next question is, natural sweeteners were included as taxable, I thought, in the definitions of soft drinks. Yes, that is correct. Natural sweeteners are included as taxable. It's possible this person is thinking about the juice portion.
Yeah, it's a little bit confusing in that natural sweeteners are considered, if a beverage is sweetened with a natural sweetener, it is a soft drink, unless it's over 50% fruit juice. So there's a specific carve-out for fruit juices. So if it's sweetened naturally with anything up to 50% or anything that's not fruit juice, then it still is a soft drink. Once it hits 50% fruit juice, then it becomes exempt. That's the way the definition works.
And the natural sweeteners include maple syrup. So any added maple syrup would be included in that.
Yeah, and just to clarify, maple syrup itself is not considered a soft drink because people don't drink it, but if there is a beverage flavored with maple syrup, then it would be considered a soft drink. There was some debate about that.
So this person's mentioning that last question, Pedialyte was mentioned as being taxable. Why is this not considered a dietary supplement?
I actually looked this up over the weekend. Pedialyte, my understanding is it does not have a supplement label under that's required. There is a definition of supplement in our statute, but I can give you the section, but we can also supply that to people. But in case you're inclined to look it up, it's 32 VSA 9701, subsection 27. But we can do something we can get some information out to Jim and to other people about what exactly a dietary supplement is, so that people can administer this and know what is a dietary supplement and what's not.
The next question is, kombucha tea has to have some sort of sweetener or sugar due to the fermentation process to make the tea, so wouldn't all kombucha tea be taxable?
Again, doing research on this, my understanding is that in your basic kombucha, the sugar is used in the fermentation process, but it's essentially consumed in the fermentation process and is no longer in the final drink. So if you look at the ingredient label for kombucha, there's not going to be any sweetener bound on that label. So if there's no sweetener on the label, it's not a soft drink. So only if there's additional sweetener added to sweeten the beverage, such as some sort of flavoring, that's when it would become taxable. But because the sugar, while there is sugar used in the fermentation process, it's consumed, and the sugar is not contained as an ingredient in the final product.
We have learned a lot about kombucha. Is there a way to get a test account to test programming changes for EBT? I am not sure of that answer. It's certainly something we can look into. And Jim, I don't know if you have any ideas around sort of testing with the EBT or what that would
That's a good question. I don't offhand know. I think Dan might be our go-to person on that. I can certainly check with him on that. I don't know. I know when we first went EBT and electronic, there were some testing done. I'm not sure. We can ask.
Okay. I sent Dan an audio pin, but Dan, if you're listening to this too, feel free to write in or accept that audio pin and hop on and say anything to that. And it's certainly a good question, and look into it. Is there a grace period for companies to apply this? I think the way the tax department is sort of approaching this is, in general, we are focusing a lot more on education and outreach, hence this webinar, despite all of the technological problems last week. And so we are sort of coming to this with an attitude of we are going to educate you as much as possible and work with you on this. So there's no set sort of grace period or anything, but we're certainly placing a lot more emphasis on education and letting people know. So we encourage folks who have questions to call us so that we can answer them and help you out with that. And our contact information is on the is right here for if you have any questions. The next question is, would Ensure or Muscle Milk drinks be taxable? I do not see a supplement label on the packaging.
If there's no supplement label, the only question for me, especially with the muscle milk, would be whether it contains a milk product. If it contains a milk product, then it would not meet the definition of soft drink. But and the same, I guess the same would be with Ensure. But if they do not contain milk products, although I believe they do, then they would be a soft drink. But if they contain a milk product, which I'm guessing they do, then they would not be taxable because they're a soft drink.
Yeah, I think they would not be taxable. And the Ensure, so it's a milk product or it's a milk substitute product, and Ensure has that soy substitute, and so that is what makes it not taxable. It has that milk substitute product.
Devin and Jeff, if I also may mention, I know you had indicated before you will be posting on your website the new fact sheet and other information, and we will also on our own website, vtrga.org, under resources/regulatory, we will also have the latest updates posted as well.
Great. So Jim, we still have a bunch of questions. We're happy to answer a couple more if that's okay with you.
Sure. It's your clock, so go ahead.
Is there a difference between cash and food benefit in regards to charging tax? When a customer swipes the EBT card, they get to choose between cash or food benefit. Food is tax exempt. Is cash tax exempt also? And this is a great question. My apologies again. I did think that I read up as much as I could on this, but I will check into that. Yes, that food is tax exempt. I will check on the cash. As I mentioned before, the sort of rule of thumb is it a government program. So I will confer with the Agency of Human Services and work to figure that out a little bit more and let everyone here know.
Devin, my understanding is cash is cash.
Okay.
Customers can buy products that you can't buy with SNAP benefits, such as tobacco or alcohol or paper products, and stores do charge taxes on those items under state law. So unless it's the SNAP, the food benefit, cash is cash. They can use it for whatever their needs are.
Okay. I think that makes sense, and thanks for confirming that. So yeah, cash is cash, and then the food benefit, that's where you don't do the taxation.
Okay, the next one is juice with sweetener added. Okay, I feel bad because I don't have to answer any of these snap questions. Juice with sweetener, again, it depends whether it is 50% fruit juice or not. If it's, once it reaches 50% fruit juice, it doesn't matter if it contains any sweetener or not. It's never taxable. If it has less than 50% fruit juice and it contains a sweetener, then it would be taxable. And similarly, the next question is it true that those beverages sweetened with 2% fruit juice would be subject to sales tax, while a beverage containing 51% fruit juice would be exempt? And the answer is yes, for whatever reason. If there's over 50% fruit juice, it's exempt. If there's less than 50% fruit juice, in this example, 2%, that would be a soft drink and be taxable.
Jeff, if I could just clarify again, I think the statute says, as you alluded to before, over 50% fruit juice is exempt. There are some products that are exactly 50% on the label, and as I would interpret that is taxable because it's not over 50%. Is that correct?
That's correct. Thanks for clarifying that. Yes. So it's, I think I said 50% or more. It's 50% or less is taxable. 51% or more would be exempt. So thank you for clarifying that. Are Hershey's milkshakes taxable? Again, if it contains any milk or milk substitute, it would not be. I'm assuming that a Hershey milkshake would contain some degree of milk or milk substitute, so that would not be a soft drink. Is coconut water with sugar considered fruit juice? Honestly, I'm not sure. I'll have to look into that and get back because I'm not sure if the coconut would be considered fruit. The coconut water would be considered fruit juice. So I will look into that and I will get an answer to Jim.
And I'm sure that answer is out there since there are a number of states that do this and probably have run into this issue. So yep, we will look into that.
Okay, is a 64-ounce bottle of Ocean Spray cranberry juice cocktail taxable since it contains less than 50% juice? Yes, if it contains less than 50% juice and a sweetener, which it almost certainly does, then it's taxable. Okay, the next question is if someone is audited, we mentioned last webinar that they needed, it needed to show in their records that the item that they didn't charge tax on was indeed not a taxable item if it's a beverage. So they're basically asking if they need to change their descriptions. I guess it depends on what your current system is. I mean, if it says what the product is, then the auditor will be able to go and, for example, if it says Ocean Spray cranberry juice cocktail, then the auditor will be able to figure out fairly quickly whether or not that should have been taxed or not. So, yes, if it doesn't say what the product is, then that could be a problem. But again, if you can somehow show back to your inventory that you brought in a certain amount and these are what went out in that month or on that day, then as long as you can somehow link back to the auditor that this drink that you charged tax on was taxable and this drink that you didn't charge tax on was not taxable for whatever reason, then you'll be okay.
Oh, wait, 5-Hour Energy back.
Okay, so someone thinks 5-Hour Energy is a supplement. So we're running out of time, so I'll look into that along with the coconut water and verify that it should be taxable, and we'll get that information out because someone thinks that 5-Hour Energy is a supplement.
We'll look into the maple water thing too. We sort of have that question here. And so we will look into that a bit more.
Okay, and this is the question that Jim just brought up. So if it's exactly 50% juice, it is taxable because it's 50% or less would be taxable. So how do we determine the percentage of juice?
So how we determine the percentage of juice, we've been looking around, and you may have a different experience, but typically we've seen the percentage on the label, and Jim can correct us if we're wrong about that, but more and more we've seen the percentage of juice. And I don't know if you have anything to add to that, Jim?
No, I think most labels do have the percent juice on the ingredients panel, the nutrition facts panel.
Okay, again, question about Frappuccino. Again, Frappuccino contains milk, so it's not a soft drink.
So the Frappuccino is not taxable, just to clarify.
Yes. Pedialyte is taxable. Carbonated water and tonic water, again, this falls into the category of seltzer and kombucha and some of the other things. If it's not sweetened with anything, then it's not taxable. If a sweetener is added to add flavor, then it becomes taxable.
Okay. So we are just about out of time. Let's see if there's another question we can answer. So one question on the withholding taxes. The question is, are you saying that Vermont withholding taxes will now be on a semi-weekly basis or only the federal withholding? What we're trying to do is folks who are currently withholding on a semi-weekly basis for federal taxes will now withhold their Vermont state taxes on a semi-weekly basis as well. So as I mentioned before, there used to be this $9,000 threshold to determine whether people were doing semi-weekly withholding. Now it's just a matter of if you're doing semi-weekly withholding at the federal level. If you are, then you'll do it for your state taxes also. Another question is, are you required to report the employer portion on the W-2s for every employer, or is it only required if you have 100 plus employees? Is there a threshold requirement of any kind? There's already a threshold requirement under the Affordable Care Act where employers who have over 250 W-2 forms must do the reporting. What this does under state law is it requires all employers, to do this reporting on their W-2 forms. So there is no threshold requirement for that reporting. And again, it's just reporting the total cost of healthcare coverage, not breaking out the employee's portion or the employer's portion, just the cost of essentially the premium. And I think it looks like we're out of time. We appreciate, again, all the participation here. You're really doing a service to us and helping us hone our education and outreach efforts. There are some really good questions here, and I apologize that we weren't able to answer all of them. We will certainly get back to Jim with all of our answers and make sure that we have those answers available to you. As mentioned before, you can call us at our taxpayer services at this phone number. You can also go to our website or you could go to these links. You can go to the Department of Tax's website and get further information. But we are happy to keep working with folks on this. We will stay in touch with Jim, and I'm sure he will get more information out to you. And Jim, I didn't know if you had anything more to say.
No, Devin and Jeff, thank you both for your help today. And if you could also forward me the latest copy of slides, because I just tried the link and it doesn't work from the presentation. So if I send the actual PDF of the slides, I think the link will work as well that you have listed on here. So we will follow up with more information, and as you get back to questions, we will forward it to our email list. And again, we appreciate folks for taking the time to be on the program today, and hopefully over the next few weeks we can make this all work.
Great, thank you so much.